Good day Forex trader. Your USD Forex Signal, heavy bearish pressure. There is a potential short-term double bottom at $1.0900. Today's your USD signals. Risk 0.75%. Trades may only be entered before 5 p.m. London time today. Short trade idea. Go short following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.0942, $1.0958 or $1.1026. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 50 pips in profit and leave the remainder of the position to run. Long trade idea. Go long immediately upon the next touch of $1.0710. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Your USD analysis. I wrote last Thursday that if the price remained below $1.0888, it would be likely to fall hard later today, giving another good short trade opportunity. If the price got established above that level, we would likely get a deeper bullish retrace before the downwards movement resumes. This was a good call as that level certainly did act as a pivotal point last Monday and drove the price down by another 50 pips or so, giving a short trade opportunity as I had expected. The price then more or less got established above that level the next day, and we then saw a much stronger bullish retracement before the price started falling again, as I had also expected. There is heavy technical resistance pushing the price lower, and a very strong US dollar. The euro got a boost from the ECB's hawkish tilt last week, although this now seems to be wearing off. However, it remains true that there are weaker currencies than the euro, such as the Japanese yen and the British pound. Since this week's open we have seen the price reluctant to fall below $1.0900, and it seems as if we may be printing a short-term double bottom. However, this will mean nothing until the price can get established above $1.0960. Bears still look more likely to prevail if the price remains below that level. The US dollar is so strong that I will be happy to take a short trade if we get a bearish reversal at any of the resistance levels specified above, $1.0942, $1.0958 or $1.1026. GBP USD Forex Signal, bears in control for now. Now that the pair has formed a break and retest pattern, there is a likelihood that it will continue its bearish trend this week. Bearish signal. Sell the GBP USD pair and set a take profit at 1.2500. Add a stop loss at 1.3200. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3175 and a take profit at 1.3250. Add a stop loss at 1.3100. The GBP USD pair crashed to the lowest level since November 2020 as investors embraced the US dollar as a safe haven. It crashed to a low of 1.3037, which was about 8.45% below the highest level in 2021. Sterling under pressure. The GBP USD ignored the strong economic numbers published by the Office of National Statistics, ONS, on Friday. The data revealed that the UK economy continued its recovery pace in January as the impact of the Omicron variant faded. The economy expanded by 0.8% in January from the previous month. This growth led to a 10% year-on-year recovery. Other key economic numbers published on Friday were also strong. For example, manufacturing production rose by 3.6% in January while industrial production rose by 2.3%. Similarly, construction output rose by 1.1%. This week will be an important one for the GBP USD because of the top economic data from the UK. On Tuesday, the ONS will publish the latest jobs numbers. Economists polled by Reuters expect the data to show that the UK unemployment rate dropped from 4.15% to 4% in January this year. If they are accurate, it will be the lowest figure since the pandemic started. They also expect that wage growth accelerated in January. Therefore, the BoE is under pressure to continue tightening its policy. Meanwhile, the US will publish the latest retail sales numbers, which will provide a good gauge of consumer spending. Analysts expect that sales slowed down slightly as inflation remained high. The main mover for the pair will be the Federal Reserve decision scheduled for Wednesday. Analysts expect that the bank will deliver its first interest rate hike since the pandemic started this week. Some expect a 25 basis point hike while others see a 0.5% increase. GBP USD forecast. On the daily chart, we see that the GBP USD pair has been in a strong bearish trend. It managed to cross the key support at 1.3175, which was the lowest level in 2021. The pair has also managed to move below the 25-day and 50-day moving averages. The stochastic oscillator has dropped to the oversold level. The same is true with the relative strength index. Therefore, now that the pair has formed a break and retest pattern, there is a likelihood that it will continue its bearish trend this week. Aud USD Forex Signal, RBA and Federal Reserve in focus. There is a likelihood that the pair will maintain a bearish trend in the coming days. Bearish view. Sell the AUD USD and set a take profit at 0.7200. Add a stop loss at 0.7370. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7345 and a take profit at 0.7450. Add a stop loss at 0.7265. The AUD-USD pair remained under intense pressure last week after the strong American inflation data and as demand for safe havens rose amid the fighting in Ukraine. The pair fell to a low of 0.7291, which was lower than the month-to-date high of 0.7445. Fed and RBA to be in focus. The Federal Reserve and the Reserve Bank of Australia, RBA, will be the main catalyst for the AUD-USD pair this week. On Tuesday morning, the RBA will publish its minutes of the past meeting. These minutes will provide a deeper look at what happened and what officials expect in the coming months. In the meeting, the bank decided to leave interest rates unchanged and warned about the impact of the ongoing crisis in Europe on inflation. It hinted that it will only hike interest rates when real inflation remains solidly above 2%. The Fed, on its part, will start its monthly meeting on Tuesday and deliver its decision on Wednesday. This will be an important meeting because of the ongoing changes in the American economy. The labor market has tightened significantly in the past few months. As a result, the unemployment rate has dropped to 3.8% while wage growth is still strong. Therefore, the Fed will not be concerned about the labor market. Instead, officials will focus on inflation, which continues moving in an upward trend. Last week, data by the Bureau of Labor Statistics showed that the country's inflation surged to 7.9% in February. It also warned that the situation was not getting much better considering that the average gasoline price has soared to over $4. The prices of most other commodities has also risen dramatically as the conflict in Ukraine has risen. Therefore, while the US and Australia will publish data on retail sales and employment, their impact on the AUD/USD will be minimal. AUD-USD forecast. The 4-hour chart shows that the AUD-USD pair has been in a strong bearish trend in the past few days. The pair has crashed by about 2% from its highest level this week. It has also managed to move below the key support at 0.7315, which was the highest point on January 13. The pair has also declined below the 25-day and 50-day moving averages while the stochastic oscillator has moved to the oversold level. Therefore, there is a likelihood that the pair will maintain a bearish trend in the coming days.